Okay, something pretty wild is happening in the financial world. You've got the US dollar, the most powerful currency on the planet, and it's getting weaker. But at the exact same time, gold, that ancient shiny metal, is soaring to record highs. So, what's the connection between these two? How can they be moving in opposite directions? Well, that's exactly what we're going to break down.
All right, so to really get what's happening here, let's properly introduce our two main players. First up, we have the US dollar. I mean, this is the king, right? The absolute backbone of global trade. And then, in the other corner, you've got gold. This is the classic safe haven, the place investors have run to for, well, centuries, anytime things start to look a little shaky.
And look, the gap between them is just widening like crazy. The dollar lost about 10% of its value against other big currencies. That's its worst year since 2017. And while that was happening, gold's value just about doubled. So we're not talking about a little blip on the radar here. This is a huge split. And that brings us to the big question. Why? What is going on?
Okay, let's start with the first piece of the puzzle. Why is the dollar taking a hit? What's really pushing the world's #1 currency lower?
Well, if you ask the experts, they'll tell you it's kinda a perfect storm of three things. First, there's just a ton of unpredictability around US policy, everything from trade deals to geopolitics. Second, you have the administration actually saying they'd prefer a weaker dollar. And third, and this is a big one, US interest rates are falling, and that just completely changes the game for investors all over the world.
And that second point is really key. I mean, this quote right here, it gets straight to the heart of it. The thinking from the administration is pretty straightforward. If the dollar is weaker, American stuff is cheaper for other countries to buy. That boosts exports. It's basically being used as a strategic lever in this giant game of global trade.
Now, that third factor we mentioned, interest rates, is absolutely critical. Just think about it for a second. If you're an investor and the interest rates on things like US Treasury bills drop, well, your paycheck for holding those dollars gets smaller. It's just not as attractive anymore. So what do? You start looking for other places to put your money to get a better return. It's that simple. Okay, so that's the dollar side of the story. Now let's flip over to the other side and see where all that money is going. Because investors, they don't just sit on their hands when this stuff happens. They move. And right now, one asset is shining, well, brighter than all the rest. And that's gold. To really wrap your head around why gold is taking off, you have to understand this one key idea, the safe haven assets. Honestly, the best way to think about it is like a financial storm shelter. When the markets get chaotic and nobody's sure what's coming next, investors scramble to find something that won't just hold its value, but might even go up. And for literally thousands of years, gold has been the go-to safe haven. And this isn't just some random panic. There's a really clear, logical path that investors are following here. They see all the tension in geopolitics, they watch their dollars start to lose value, and they think, okay, I need a hedge. So they start selling other things and buying into the stability, or at least the perceived stability of gold. It's a classic playbook move, a defensive strategy.
And it's not just your average investor making this move either. The demand for gold is coming from all over the place. You've got people hedging against that weak dollar, sure. You've got worries about inflation. But you've also got massive players, like central banks around the world, who are buying up gold to spread out their risk. You add all that demand together, and, well, the price has nowhere to go but up.
So all of this, it brings us to the really big question, doesn't it? Are we just looking at a temporary market correction, a short-term move while things are a bit uncertain? Or is this the early sign of something much, much bigger, like a real shift in global confidence?
And that right there, that's the question that has economists and analysts completely tied up right now. And to be honest, there are some really good arguments on both sides.
So let's look at the two competing views here. On one side, you have the people saying, hey, slow down. This is just an isolated thing happening with precious metals. And they have a point. They'll show you how well US stocks, especially in tech, are doing. They argue that if this was a real crisis of confidence in the US, everything would be down. But then the other side comes back and says, not so fast. They see this as a warning shot. They're worried about the long-term picture for US growth, and they're pointing to huge players like the BRICS nations who are actively trying to find ways to do business without the dollar.
And this quote, this one really nails it. It's such a great analogy. The weak dollar isn't the bad weather itself. It's the barometer telling us that the weather is changing. It's a reflection of the whole economic climate, not the cause of it.
So where does all this leave us? What happens next? Well, for policymakers, the people who actually have to steer this ship, it creates a really, really tricky situation.
Yeah, there are absolutely no easy answers here. A weaker dollar is a total double-edged sword.
The pros? Sure, U.S. exports get cheaper, which is great for competitiveness. It can help bring manufacturing back home. But the cons? Man, they're serious. It means your money doesn't go as far when you buy things. It risks sparking inflation. And it could even mess with bond markets. It is an incredibly difficult balancing act.
So, is this the end of the dollar's reign? Well, for now, the short answer seems to be no. Experts are pretty much in agreement on this. Look, a lot of countries would love an alternative. But building an entire global financial system from the ground up, that's a massive, massive undertaking. We're talking decades and decades to build the kind of trust and infrastructure needed. Right now, there's just nothing else that can take its place.
And so, that's where we are. We're watching this incredible tug of war between the world's most important currency and its oldest safe haven. Is this just a temporary blip, a reaction to the politics of the day, or are we watching the very first pages of a new chapter in the global economy being written? Are we just watching numbers on a screen, or are we actually watching history happen in real time? I guess only time will tell.